All right, good morning, everyone. Good morning, YouTube. Good morning, traders in our trading room. We just traded the non-farm payrolls here, up from that 36, a decent 10, 11-point move. Right now, market's back into that 36. So let's talk about what these non-farms are doing before we talk about some of the trade plans and setups, and talk about yesterday even, because what had happened yesterday was a pretty strong downside move that got liquidated by the buyers into the highs. So what is going on here with my charts? It's weird stuff. Some of these charts are glitching out pretty hard right now. Like this TPO isn't even moving. I might have to restart this. Oh, okay, it's moving now. Okay, I'll give it a minute. Anyways, so we'll talk about the trading plan afterwards, but right now let's just talk about the NFP, the non-farms, right? We have the non-farm payrolls that came out this morning, right? It was a pretty highly expected event that we trade with our live trading room. The Labor Department's non-farms, the figure came out, I believe 209,000 in comparison to the expected 225,000 jobs added in June, down from the May case, which was about 340,000 increase in May, which represented the second strongest month of for job creation so far this year. So the monthly figure has beaten every single estimate over the past year except for one, while the current projections would trail a 6-month average of 314,000, highlighting just how hot the labor market has been. So Jerome Powell has explained that the central bank's inflation fight had yet to be resolved, as this economy is very strong, and what's driving it is a very strong labor market. So as such, it will take some softening of the labor market for inflation to come down closer to the 2% target that the Fed does have. Aside from lingering labor shortages, the Fed will also keep an eye on wage growth. Average hourly earnings are expected to rise 0.3% in the month of June. I just want to check these figures. The actual number that came out was 0.4%. The average U.S. average earnings year over year, right, 4.2% expected, while the 4.4% came out. And then U.S. unemployment rate, 3.6% expected, 3.6 did come out. So despite the Fed's resolve to squash inflation, having jacked up its benchmark rate to the target of 5 to 5.25% from a near zero over a year ago, the slew of data this week has pointed to a tight labor market, and Thursday's ADP measures of private hiring smashed expectations, and the Challenger job cuts report signaled a sizable drop in job cuts, which sent Treasury yields soaring to the upside, putting a lot of downside pressure in bonds. So a lot of people are actually looking at bonds here. The aggressive downside and the widening of the bond equity market disparity, and they're thinking that this the equity market has a lot of work to do to come to the downside realistically. So Jolt's report also showed a fall in the job openings, while the quit rates ticked up to 2.6%. A number of Americans filing for initial jobless claims rose over the past year. So realistically, we got a miss on the jobs number. We rallied not quite a bit, but we rallied a decent bit, maybe 10 handles or so before dropping about 20. Right now, we're lingering around these lows into the low 30s. So seems like that bad news continues to be bad news. Good news continues to be good news. So in other news here that we have, we can talk about chips. We can talk about Zuckerberg, Threads, blah, blah, blah. So Twitter is threatening Meta with legal action over Instagram's Thread launch, as Elon Musk tried to take off his gloves following a sparring match with Zuckerberg. So Twitter lawyer Alex Spiro, I don't know, has accused Meta of poaching former Twitter employees with access to trade secrets to build a competitor app, which has garnered 30 million downloads within the 24 hours that it launched. So many analysts have allotted Threads, with some projections, a long-term sales boost for Meta, while investing group leader Daniel Jones acknowledged some risks associated with the launch, but believes that the good outweighs the bad. Realistically, I don't know. I don't have access to Threads here in Europe, so I don't know what the whole deal is about them. I honestly think that, like, I do like Twitter right now. A lot of things are different when they change at first, but who knows? It could be great. Today, we have EIA natural gas inventory. We have Baker Hughes rig count at 1 p.m. So far, right now, markets are down from yesterday's close as it stands. And let's talk a little more about the trade plan on the session. So, right now, what's going on? Is we have prices back under that 444, right, which is a huge area. Prices are lingering around that 44.32. If we open under 44.32, I honestly think that we could go and test the bottom side distribution around the 44.06, maybe even 43.98, right? I don't think that's out of the question necessarily. A lot of bearishness, a lot of reoffer again off this open. But if prices manage to pop up into the open around the 40s, they do stand a chance at some of the positive upside. I'm just watching two different areas realistically. If we can move above the 44s, right, there could be a decent bit of bull side. But under this 32, honestly, I'm not very happy with how these offers are coming in if I were to be more bullish. Realistically, we have two tails that are shaping up on the overnight profile, which could probably push price somewhere into the middle of the distribution by the open around that 40. So it's going to be one of those days where we just kind of sit back, wait to see what the information looks like, right? What the market is telling us. Because right now, I would say the offer is a bit stronger, but there are some very key areas where bids have shown up and they might show up again. So it is Friday. Generally, they are a little more bullish, but it wouldn't be surprising if we just start selling off again before more longs come in. It's been very difficult this week for the long side. The bid has been fairly weak on a short week, right? I'd say it's only a 3-day week realistically. Markets were open like half days on Monday. I don't even think they were open on Tuesday. I don't know. I didn't really check. But, anyways, I'll be looking for kind of mixed balance on the session today, seeing if some of these bears can try the downside or some of these bulls can try the upside. Bears, like I said, under 44, they have some kind of strength. Under 32, it gets real bad for the bulls. Above 44, I do think the bulls can try to take this back up. But what I'm seeing right now, fairly bearish market order flow that's coming out. So I'm going to break down this plan a little more with our trading room, and we'll see you guys there. We're going to wrap up Friday. I hope everyone has an amazing weekend, and we'll do this again starting next week. So thank you everyone that watched us on YouTube, and take care. Let's see here.